Hello and welcome to the weekly outlook. We're just going to go through the calendar and see what we've got going on next week. It's fairly flat at the start of the week, and things start to pick up and get interesting round by sort of Wednesday. So until then, I'm not really looking to take anything for granted as to the direction of currencies at this time. The non-farm payroll came in with not too bad figures for the US. We had a rise in average hourly earnings, a drop in unemployment. The non-farm payroll headline figure did drop below 200k, which is why we had a bit of a sort of spiking and a bit of a dance around in the markets. The euro actually closed higher than previous levels from the non-farm payroll, but at the moment it's just kind of sat around this area here. So how are we going to play things next week? Well, we're really looking at the Canadian dollar and the New Zealand dollar. Okay, they're the two currency pairs that I'm going to be looking at and focusing on next week. We've got the BOC rate statement on Wednesday, and we've also got the RBNZ rate statement on Wednesday evening as well. So Wednesday's really a big day for us. Okay, now I'm going to be looking at the Canadian dollar. Their data came in slightly mixed today on Friday. They had a unemployment rate actually got worse. It came up to 7%, but unemployment change was actually a beat at 12k. The labour productivity quarter on quarter was worse than expected as well, and worse than previous. So it does show that there's been a little bit of slack in the labour market and the Canadian dollar, and obviously we have had that falling oil price as well. So just have a quick look at oil actually whilst we're there. Oil has started to fall again. It's back down, sort of touching on those $45 to the barrel mark again. So it has had a spike up, but it did make a slightly lower high. The second shoulder, maybe again the second shoulder is forming on this head and shoulders pattern that we had here. It may be just a misformed shoulder on the second run. So we'll see how this forms. If this breaks out below there, then we could well see this start to rally for the Canadian again. Now, in terms of how we're going to trade the Canadian dollar, well, at the moment it's shown a bit of weakness against the US. But what interests me about the Canadian dollar is if we take it to the weekly chart, you can see how we've got this acceleration in this upward trend here, and then it starts to decelerate and starts to curve around this point, and then it rejects this 13350 level here. Now it's pushed back up there, but it hasn't made a new high on the weekly candle yet, and it's just sort of dithering around this point. And even with that non-farm payroll figure and the worst data coming from the Canadian, it still rejected that 133 level. So I'm inclined to think that we're in for a bigger pullback on this, and it may be because the market sees this as overbought and looking to pull back to this 128 level, which is this previous area of resistance. Okay, so how am I going to trade this? Well, I'm going to be trading out of the BOC data. I want to listen to what the BOC have got to say on Wednesday, and hopefully we're going to get a little bit of neutral activity from there, and maybe a little bit of forward guidance. And then I'll be looking to see if we can sell this off and get a bit of a pullback. We've got the US, I've got a bank holiday on Monday as well, so there's going to be a lot of people taking profit possibly on US dollar longs. US dollar longs have diminished slightly on the COP report. In fact, long positions now on the US dollar have actually changed from they're the lowest levels in over a year on the US dollar long positions. Okay, so there's definitely a shift in sentiment there in that, and with this being fairly high at the moment, I do picture a pullback, and that was just, I think the 128 is just the beginning. I think we could see a much further a pullback, even down to these much lower levels, depending on what happens with the rate hike. But we're looking at this as the initial where we're going to go from here, and it's not a bad spot where it is at the moment. Looking for a rejection, we have a nice tight stop loss on there of maybe 70-80 pips, and we could trade this down next week. Okay, now the other one that I've got interested in is the New Zealand dollar. Now the problem with the New Zealand dollar, US dollar, is it's already very, very low, and it's only 280 pips away from my target of 60 cents to the dollar. Now what the calendar's suggesting is that the RBNZ are going to keep rates on hold. Now there hasn't been a lot of rhetoric going around regarding the New Zealand dollar, but what I'm going to quickly do in front of you here is have a quick look at the tools that I use to see how data's changed regarding the New Zealand dollar, and we can have a look in particular at their figures in the last few here we go, New Zealand. Okay, so interest rates, obviously they've cut it twice from 3.5. Lowest key rate to 3%. And let's have a look at some of the data here. Okay, so interest rate has dropped from 3.25. What we want to see here is things like the GDP and the unemployment rate. So let's have a look. Okay, so GDP growth. We've actually had a drop in GDP since the previous reading there. You can see 0.8 dropped down to 0.2 on the last one. Annual growth 2.6 from 3.5, so a drop in there as well. Let's have a look at some of these bigger figures. Inflation 0.1 to 0.3, so a slight rise in inflation, slight rise in inflation month on month as well. Consumer price index 1198. A slight rise. So inflation has actually not been too bad. GDP, gross domestic product, hasn't been brilliant. Unemployment rate had a slight rise there. You can see from 5.8 to 5.9. Unemployed persons, a slight rise. So employment and GDP aren't looking too hot, but inflation is rising, and that really what the interest rate is all about, is about inflation. So if inflation's showing slight signs of improvement, then it may be that they might keep rates on hold this time. They've just had 2 rate cuts. The New Zealand dollar is falling quite nicely against the US dollar, which is what they want. It could be they keep rates on hold, which will cause a temporary rally. Now, I still expect the 60 cents to the dollar to be the fair price, but I think if they keep rates on hold, we could see a pullback up to this 7.4 area, which is going to be a prime between 7.4 and 7.6, which is going to be the perfect area for us to resell this back down. This is the weekly chart. Obviously, if we take it to the slightly lower time frame, to the daily, when it finally catches up here. Okay, you can see we've got a nice area of confidence around the 6.6 as well. It's all good. I think it's really going to depend on how the rate statement comes out from the RBNZ. If they're going to suggest that rates are going to stay on hold for a long period of time, then we could see it rally further. I don't think it's going to be as straightforward and as clear cut as that, because we've got this slowdown in growth in China, which is affecting these antipodean currencies as well. They certainly don't need to talk the currency down any further. I think the market is pricing in a rate cut. If they don't cut rates, I think we will see a rally back up to these sort of areas here, between 6.6 and 7. It's quite a wide space, but these are the areas where we can look to resell this in the future. But we've got to wait for that data to come out. We're going to be trading out of these data announcements, so keep an eye on the in the live room and see how we get to as we get closer and closer. Okay, thanks for watching, and I hope you can make some pips.